This is a teacher Haris Bhatt, and you are seeing my YouTube channel Learn Accounting with Sir Haris. I welcome you all because I have come with something very special for you, and you will be amused and honored. And I want your complete response on this. I want you to motivate me, and I want you people to appreciate me for that so that I can bring some more good things for you. Why? Because I'm not getting anything out of you, out of it. There is nothing I'm getting from you for the reason I'm uploading this lecture. I'm taking my time out. I'm solving the question without the solution. So this is only for you people all over the world. So I need your love and affection, your appreciation, which is very important in our country like Pakistan. Believe me, right? And my YouTube channel is not monetized even. So thank you very much. So today I have come with the paper 2 of igcse 0452 and 7707 accounting paper 7707 and 0452. Thanks to my lovely brothers all over the world who have helped me out to get this paper. I'm thankful to them. October, November 2025, variant 22. October, November 2025, variant 22, which has happened on 7th of October. Happened on 7th of October, igcse 0452 7707, October, November 25, 22. Let's start the first question. That is from Cash Book and Bank Reconciliation Statement. Let's read this. On 31st March 2025, Zach's bank statement showed an overdrawn balance of 1665, but the bank column of his cash book showed a debit balance of 625 on the same date. Not 625, it is 825 on the same date. Upon investigation, he discovered the following items appeared on the bank statement, but not in the cash book. So these are the errors which is recorded in the bank statement, but not in the cash book. Obviously, they are receipts and payments. So let's record that. The following items appeared in the cash book, but not in the bank statement. So these are the errors or the discrepancies made by the bank, which includes, that not unpresented checks and uncredited checks. Same for the above part, receipts and payments, like bank charges, standing order, electric charges, they are payments. They used to come on the credit side of cash book bank column, and bank transfers from the customers, interest received, they used to come on the debit side. So update the bank column of Zach's cash book. So let's prepare that. So I'm going to prepare the updated cash book, or you can say adjusted cash book for October, November 2025, variant 22, question number 1, which is quite easy actually, not a very difficult question. It's quite a simple question. I believe that the grade threshold would be around 61. The grade threshold would be around 61. So I'm going to write the brought down over here. You will write the full portion of the brought down. So the brought down, which is available right now in the question, the brought down available, that is 825. So let me write it down. Brought down, and it is a debit balance, 825. If you just see the question, again, there is a debit balance of cash book, 825, but the bank statement has overdrawn balance of 1665. It means that bank statement also has a debit balance. Yeah, because overdrawn balance or overdraft balance means cash book credit balance and bank statement debit balance. So we have a cash book debit balance of 825. Payment received by bank transfer from Zoe, a credit customer. So this is the receipt actually. So let me write it down. That is how much? 310. So here comes receipt from Zoe. And what is the amount? The amount is 310. So I will write it on the debit side because it is credited in the bank statement, but not yet debited in the cash book. Right. Next, electricity charges paid by direct debit. That is going to be 936. So that is the electricity charges, which is the payment. So I will write here. Yeah. I got the full paper. Inshallah, I will solve it till tomorrow or the day after tomorrow. I will upload all the questions along with the solution. So electricity charges are here. That is 936. This is the payment. Why? Because it is debited in the bank statement, but not yet credited in the cash book. So I have to give it a credit in the cash book bank column because it is not recorded in the cash book. Bank charges, that is 58. I will write in the credit side of the bank charges, like here, there is going to be how much? 58 bank charges. Again, it's a payment debited in the bank statement, but not yet credited in the cash book. Next, standing order for insurance has been deducted in error 1121. It is debited in the bank statement, but not yet credited in the cash book. So I will write here, and the name is going to be standing order, and that is 1121. That's it. The next is going to be interest received. Interest received by the bank, but not yet debited in the cash book. So it's a receipt. It will come on the debit side with the name interest received, and the amount is going to be 45. Now let's go for the total of this. If I'm not wrong, I believe that the credit side looks more. So let me write the total of the credit side because it is the heavier side. So it means that the cash book debit balance is going to be converted into credit balance because of the standing order or electric charges. So the total is going to be 2301. I will write here also 2301. Okay. 1121, 58, and 936. And now I will subtract. So the answer is going to be 935, which will come over here with the name balance carried down. And I will write here 935. It will be the brought down. It is going to be have a credit balance. I'll write here 935. So I'm going to go for the credit balance. I just want to do it again. Just wanted to calculate it actually. Just to confirm it actually, because I find it maybe it is a little wrong. Plus 1121. That is 2115 is the total on the credit side. Minus 825 minus 310 and minus 45. So the answer is 935, but the total is wrong actually. That is 2115. So that is the wrong total. That's it. Otherwise, quite fine. So the total is 2115. 2115. Here also, the credit side is heavier. I will write the total on the debit side, and that's it. Now I'm going to prepare the bank reconciliation statement, which is going to be I'm going to start it from the bank statement balance. Yeah. You don't need to go for a revised cash book balance in solving the bank reconciliation statement unless it is stated that use revised cash book method. Otherwise, there is no need. Start from the balance as per bank statement. In cash book, we will correct the cash book and we will find out the corrected cash book balance to be written in the statement of financial position. And in bank reconciliation statement, we will start from the bank wrong balance, which is over here is debit balance given in the question, and we'll correct it. And then both the balances should be equal. That is 1665. So let me write it down here. 1665. As it is debit balance, we know that when we have debit balance, add unpresented checks. We used to do add unpresented checks, and less uncredited checks is going to be subtracted from this to get the answer. So add unpresented checks and less uncredited checks so that we can get the solution of this particular question easily. Okay, so let's talk about the unpresented checks first. Let me go back. Yeah, a check payment to AC Motors had not been presented for payment, right? This is not presented checks 480. So I will, what should I do? Bank statement debit balance, add, but you have to write the name. Yeah, AC Motors. You have to write the name, otherwise your marks will be deducted. So the amount is going to be 480. Less uncredited checks. Let's see if they are, yes, cash and checks deposited into the bank 1210, but not yet credited in the bank statement. So this is the error made by the bank. 1210 uncredited checks, that will be subtracted. So I will write here 1210, and if I'm going to solve it over here, I will got the answer 1665 plus 480 and minus 1210. Let me calculate it for you, because it's better always to calculate it actually. 1665 plus 480 and minus 1210. 2145. Sorry, 2145 minus 1210. So answer is 935. So that is equal So it's quite easy to solve this question in the exam. So I will write here balance as per bank statement, because the balance is positive. So it is going to be a, yeah, balance is positive. So that is why it is going to be a same balance which we are going to have. That is going to be the debit balance, whatever we have in the past. If the answer is in negative, we will change the balance. We will do it as a credit balance. But answer is in positive, so that it is balance as per bank statement debit 935 and balance as per cash book credit 935. They both are equal, but they are opposite, because cash book is always opposite to bank statement. Second thing, you can write it over here, balance as per cash book credit. That is even fine, because both the things, either we will write it as cash book credit balance, or we will write it bank statement debit balance. Both the things have the same meaning. Okay, so this is how we are done with this question. He has asked to prepare the cash book first, and then he wanted us to prepare the bank reconciliation statement. As it is not mentioned that which statement they want us to prepare, so we can easily go for the bank reconciliation statement like we have prepared in the normal way. Now let's move on to the next parts of the question. I need to find it out, that which parts. I have all the obviously papers with me. So let me see which parts we are going to have. So this is not the part actually. Second part, these are the A part and B part. Now I'm moving towards the next parts of the same question, that are C, D, that what they are all about, or what they want us to be, to go for the question. So I'm going to go for those parts. Yeah. These are the paper actually. I'm both all papers. I've solved it in front of you. Inshallah, soon you will get all the solution from me, obviously. Right? So let's see the next parts of the question. If you see the C part, it states that currently Zach completes a bank reconciliation statement twice every year, but is now considering completing one every 3 months. Advise Zach whether he should be completing a bank reconciliation statement every 3 months. Justify your answer by considering advantage and disadvantage of doing so. So first of all, you need to be very clear about this, that bank reconciliation statement is normally prepared monthly. So we are doing it twice in a year only. We should go for monthly bank reconciliation statement, or at least quarterly bank reconciliation statement is always important. Why? Because reconciling the accounts is a very important activity, because you will be able to know the fraudulent activity, the disagreements between the cash book and the bank statement. The errors are prevented, which will affect your financial statement also, because the closing balance of the corrected cash book is going to be shown in the financial statements, in the statement of financial position, right? So it's typically done at regular intervals, such as monthly or quarterly, as part of normal accounting procedures, right? So monthly will be more accurate, but if you're doing it only twice, so it means that you are facing some issues in, some cash flow issues. So for that, you can do it, quarterly. Some accounts may require, sometimes it requires even more frequent reconciliations, more than one in a month. Causes are discrepancies, errors, frauds. So these are the things which basically want us to prepare the bank reconciliation statement frequently. So 3 months is more accurate, because you want to find the errors and want to correct the errors as quickly as possible, to find the corrected cash book balance and to reconcile the cash book balance with the bank statement. But the disadvantage is that it is going to be costly. It needs some paperwork, it needs some administration work, right? Then you know that when there is a timing difference, you have to overcome that timing difference. Then there are problems of receipts and payments which needs to be taken into the task. But for having good cash flow management and to maintain accurate financial statements and to avoid fraud and errors, and for effective tax reporting also, it is always better to prepare bank reconciliation 3 months, after every 3 months, because that is obviously a better option for the accounting department or business owner to do it in that manner, right? but you have to be very clear that it is going to be expensive technique, right? And you have to take the bank statement you have to take a record of the bank statement, and you have to go for a effort needs to be put in by your accountant or whoever is being in charge of the preparing of bank reconciliation statement. So that is the important way to calculate it, right? State what is meant by the term dishonored check. Dishonored check means that, when you have insufficient amount of cash in the bank, right? Because of insufficient insufficient amount in the bank, the check will be dishonored, or it will returned by the bank as dishonored because either marked insufficient fund, or if there is a forged check or the sign was incorrect, the bank might dishonor the check. So that means that the payment is not been released by the bank on that check because it has been dishonored. Maybe it is a customer check or it is given by you or someone. So this is the procedure of the dishonored check. Second thing, the E part of the question basically makes you see that compare the table because of on 5th April, Jack was notified that a check paid into the business bank account during March had been dishonored. The check for $128 was from Ali, a credit customer. So it's quite simple. The entry is irrecoverable debts debit by 128 and trade receivable. Rather, the name is Ali. So Ali is going to be credited by 128. That is quite simple. Right? So this is how irrecoverable debts debit and trade payables is going to be, trade payable, Ali is going to be credit because the name of the trade receivable is known. Irrecoverable debts debit, Ali credit by 128. Right? So this is the end of this particular question. It is right in front of you, and I have solved it in front of you just to keep you occupied and to make you understand about the particular question. Now let's talk about the question for the depreciation. So Ahmed has that is question number 3, which I'm going to solve right in front of you, is as people think that it is going to be a difficult part. I believe that the question of depreciation was a little difficult actually. The first question is from cash book and bank reconciliation with an entry for irrecoverable debts, right? Second question might be from errors, if I'm not wrong. I will solve it. Yeah. I will solve it obviously for you soon. So you don't need to worry for that. And the third question is going to be from depreciation. This is the only question which you feel little awkward in the paper. Otherwise, as I have given in the guess that you will not find a question of incomplete record. You will not find a question of non-profit organization. So that is the major chapters which creates problem for the students. So only this question has created little problem in the mind of the student, because in the workshop, I have clearly mentioned about that you will be asked to give effect of the errors before correction. So that was also a question in the exam, effect of errors before correction, then manufacturing, and then ratio question. They're very, very easy. So let's discuss that. And I will discuss that which is the important and difficult part in the question. Ahmed has a vehicle breakdown recovery business. Vehicle breakdown recovery business. He owns a recovery vehicle and has provided the following information about the vehicle. Purchase date 1st October 2021. Purchase price that is going to be 80,000. Paid by bank transfer. Estimated residual value 30,000. And estimated working life is basically 5 years. So always remember this. Always remember this, that you will not use straight line method or the formula method under straight line method if the examiner didn't ask you to solve the question through original cost method. Though purchase price is given, residual value is given, working life is given, you can use the formula original cost, that is 80,000 minus scrap value 30,000, which become 50,000 divided by 5. The depreciation for the whole year is 10,000. That is wrong. Why, sir? Because we will not use this when useful life is given under straight line method. Then you can use the formula. Here, Ahmed provides a full year depreciation in the year of purchase but charge no depreciation in the year of sale. So that is annual basis. That is quite easy. So depreciation policy is on annual basis. He depreciates his vehicle using the reducing balance method at 20% per annum. So we are supposed to use the reducing balance method, right? Not straight line method. So this formula will not be used. The purchase price, which is going to be 80,000 paid by the bank transfer, is supposed to be used in a different manner. His recovery vehicle is now 4-year-old and is no longer reliable. Ahmed considered replacing his recovery vehicle on 31st August 2025. Ahmed's financial year ends on 30th April. So it means that the question is it's not a normal financial year. It starts from 1st May. The question starts from 1st May and ends on 31st December. So that is very simple. It starts on Upani Likhawa, right? Purchase date is 1st October. That's something else. But our financial year starts from 1st May and ends on 31st December. Although we have purchased the asset of 80,000 on 1st October, but this is annual basis by reducing balance method of 20%. So months doesn't matter. So this asset has been used from year 21, 1st May, year 2021 to 22, then 2022 to 23, then 23 to 24, and then 23 to 25. And after that, right, it is going to be sold. His recovery vehicle is now 4-year-old. How come? 21 to 22, 22 to 23, 21 से 22, 22 से 23, 23 24, 24 से 25. After 30th April 2025, it has been sold on 31st August, right? 2025, it has been replaced or sold on 31st August. So replacing a vehicle is not a part of our syllabus generally, but as it is given in the question, so we have no other choice. We have to solve it that way. So let me see. Calculate the depreciation charge for each year of the recovery vehicle working life, assuming Ahmed replaces the recovery vehicle on 31st August 2025. Show your workings. Remember that you need to charge full year depreciation in the year of purchase, but no depreciation in the year of disposal. The cost of the asset is going to be how much? 80,000. So let me charge. Depreciation rate is 20%. So what you are going to do from 21 to 22, 80,000 multiplied by 20%. So that is going to be how much? Yeah, 16,000. Then again, it has been depreciated from 22 to 23. 80,000 multiplied by 20%. No, because it's a reducing balance method. 20,000 minus 16,000. No straight line method. No life is supposed to be taken into account. So 80,000 minus 16,000 is going to be 64,000 into 20%. So let me calculate it for you. 64,000 into 0.2. The answer is 12,800. Then again, 23 to 24. That is going to be 64,000 minus 12,800, because we need to charge depreciation on the book value every year after subtracting depreciation and for the whole year. So 64,000 minus 12,800. The answer is 51200 and multiplied by 20% again, because you have to charge for the whole year. So that is going to be 10240. Again, because it is used for 4 years, 24 to 25, we have charged depreciation again, 51200 minus 10240. And the answer after subtracting depreciation, 51200 minus 10240 is 40960. So let me write here first 40960 multiplied by 20%. That is 40960 into 0.2. And the answer is 8192. 8192. You can go for the total of this total depreciation for 4 years. That is going to be 16,000 plus 12,800 plus 10240 and plus 8192. The answer is 47232. 47232. This is the total depreciation on the asset sold or replaced from the date of purchase till the date of sale according to annual basis. Full year depreciation in the year of purchase, but no depreciation in the year of sale, right? Because after 4 years, it has been sold in 2005 to 26, actually in August, but you will not charge depreciation in this year. Okay. So we have calculated the charge for depreciation for this particular stuff. Calculate the depreciation charge for each year of the vehicle working life, assuming A.C.M.A replaces the recovery vehicle on 31st. Just show your working. So I have shown the working. I just want to see the marks, 4 marks. So you can easily assess that why 4 marks have been given to this particular stuff. Now let's move forward to the next part of the question. So let me go back. Here it is. Oh. Yeah. You can assess that this is going to be one of the difficult questions we have in the exam. Not that difficult because it is a little confusing, I believe, because students used to believe that maybe they are going to go for a straight line method. They should charge depreciation under straight line method through formula used, but that is not the case actually. You are not supposed to use the formula because the depreciation should have been charged under reducing the balance method actually. That is what the question is all about, that you need to charge depreciation under reducing balance method at the rate of 20% per annum. This was the case actually for this particular stuff. So now let's see. The other parts. State one advantage and one disadvantage of the reducing balance method of depreciation. Advantage is this, that it gives more accurate value of a non-current asset because it takes into account book value or carrying value to record the depreciation for the next year. So it gives more accurate value to record depreciation. Disadvantage is it is a more complex method. Then even the net book value will never become zero. If you will subtract depreciation and then calculate depreciation, the net book value will never become zero. Secondly, if you have technological assets, so they used to reduce their value more in early years and less in later years. So then obviously reducing balance method will give you more accurate depreciation. Secondly, in straight line method, the depreciation will remain constant, where in reducing balance method, every year, the value of depreciation will decrease. So expense will also decrease with the passage of time, even for the next year, and that will give more profit also. So let's move forward. On 1st February 2025, a local dealer offered to buy the recovery vehicle from A.C.M.A for 35,000 cash. On 1st February 2025, a local dealer offered to buy the recovery vehicle from A.C.M.A for 35,000. Calculate the profit or loss on disposal if A.C.M.A had sold the recovery vehicle to the local supplier, to the local dealer, on 1st February. Show your working and state whether it would have been a profit or loss. This is again a technical question regarding O levels, not for A levels, but O levels. I consider it somehow or the other a little difficult question. Why, sir? There is a reason behind. Because in the previous part, they wanted us to depreciate the asset for 4 years, which was 22 to 23, 23 to 25, and 24, 23 to 24, 24 to 25, the 4 years. But now he wanted us that we have sold the asset not in 2026. He is basically asking that we have sold the asset before the end of 2025. Now let's discuss that on 1st February. See, annual basis, but our financial year starts on May and ends on April, right? So it means that May 21 till April 22, 1 year completed, 16,000 depreciation. May 22, April 23, 1 year completed, 12,800 depreciation. Then May 23, April 24, 1 year completed, 10240 depreciation. Full year, the whole year, right? Even the asset has been purchased on 1st October in 2021, but you will charge depreciation for the whole year because we are using annual basis. Then for 2024-25, the asset has been sold. So we will not calculate depreciation. How come, sir? See, this particular year has started on 1st May. So let me write the dates. On 1/5/24, and it will end on 34/25. Now, the asset has been sold. The recovery vehicle has been sold on 1/2/25. So this comes in the same year from 24 to 25. It means that after 3 years, The examiner has asked us that we are selling the asset after 3 years. And now tell us that either we are going to have a profit or a loss because we are selling it on 1st February. But we don't need to calculate depreciation for the months from May till February, like May, June, July, August, September, October, November, December, January, and on 1st February it has been sold. No, why? Because annual basis. So the asset, and the asset is being sold in the year in which the asset is sold, we will not calculate depreciation, my dear. उस साल depreciation नहीं लेंगे, तो 24 से 25 में नहीं आएगी. This asset is being used only for, should be depreciated for 3 years, 16,000 plus 12,800 and plus 10,240. So let me go for the total of this. Let me calculate it. 16,000 plus 12,800 plus 10,240. Total is 39,040. Okay. Now the cost of the asset is 80,000 minus the total depreciation. Total depreciation to date, to the date of sale actually, that is 39,040. So the value is 40960, which is already given to us. 40960 is the book value. Here, already given 40960, but I have still calculated. And it has been sold for how much? 35,000. So it means that we are going to have sold for, this is the book value. It has been sold for 35,000. So we are going to have a loss of 5,960. That is going to be the loss on sale of this asset, which we have calculated particularly. Got it? So we are done with this particular part also. Yeah, it is technical. If you talk about O levels, I believe that you need to give some time to the question actually. It's not a straightforward question actually. Because after 3 years, it has been sold. So the total depreciation of the 3 years from the cost of the asset I have subtracted, right? Or you can find the net book value, whatever is available at the start of 24, because it has been sold in 2024 to 25. That is 40690, and it has been sold for 35,000. So there is going to be a loss of 5,960. Okay. Now let me see the 3 marks only, obviously. So that's why they have given 3 marks. Now prepare the A.C.M.A's motor vehicle account here for the year ended 30th April 2025. If A.C.M.A had sold his recovery vehicle to the local dealer on 1st February. So that's simple. You have to prepare the motor vehicle account. If you have sold the delivery vehicle, only 2 marks are given for this particular part. My God. See what Cambridge is doing with you. So because they know that you have done all the calculations already in the past, and you just have to prepare the motor vehicle account, they are not giving you the excess. Remember this, the asset account is always prepared with the cost of the asset. It is debited with the cost of the asset sold and credited with the cost of the asset purchased and credited with the cost of the asset sold. So this is going to be 225, and again 2024 to 25. This is the financial year actually, which is given in the question. I will start with the cost of the asset, which is already given to me. That the asset cost is over here, will come over here, because we have I will write here 1/5/24, because our financial year starts on 1st February actually, right? I will write brought down, and the cost of the asset, that is going to be 80,000. Any further asset is purchased? No, no asset is purchased. We have sold the asset on 1/2/25. I will write here disposal. It will be credited with the cost of the asset sold, and that is again going to be 80,000, because the same asset has been sold for 80,000. So there is not going to be any kind of carried down balance, because there was only one asset and it has been sold out. So it is debited with the cost of the asset purchased, and it is credited with the cost of the asset sold, as we are preparing it for 24 to 25. So we have already asset account brought down available on 1/5/24. Okay. Now let me see that maybe he is asking us some other things in C part. I don't think so. Okay, that's fine then. Prepare the A.C.M.A's disposal of motor vehicle for the year ended 30th April 2025. Okay. If A.C.M.A had sold the recovery vehicle into the local dealer on 1st February. So if to go for the disposal of delivery vehicle, we have 4 marks. for the disposal, which is again quite easy. Let me prepare the motor vehicle disposal account. Yes, you can say that other parts were a little difficult, but that is quite easy. This particular portion is quite easy because we have already done the whole working for the disposal. We have already done whole working for the disposal. We are done with that. So here comes the cost of the asset, which is going to be the motor vehicle. The first entry, motor vehicle disposal account debit and motor vehicle credit. Motor vehicle is credited because of disposal, and motor vehicle disposal account is going to be debited because of motor vehicle. Here comes provision for depreciation or accumulated depreciation to motor vehicle disposal account. So provision for depreciation account, which is not required here, will be debited, and disposal will be credited with provision for depreciation, the total depreciation on the asset sold. Now we have to calculate that, and we have already done that in the past. We have shown that is 39040, the depreciation for the 3 years for which the asset is being used. So I will write here 39040. Now it has been sold for a price of how much? 35,000, which I will write here, bank to vehicle disposal account. I will go with the total. Total of the debit side is heavier. So there is going to be a loss, which we have already calculated. That is going to be 80,000. I will write the same thing here. That is going to be 80,000. I will write here statement of profit and loss, or income statement you can write with 5960. If debit side is heavier, we are going to have a loss. If credit side is heavier, we are going to have a profit, which will be written on the opposite side actually. I'm just calculating again just myself. That is 5960. So we are done with that. It's quite easy. I hope that you got the point. So we are done with this particular part of the question. So this is how we are done with this particular question. I hope you got it. If you have any problem, you have my WhatsApp number 0333471287. You can message me. You can ask me questions regarding this, right? And I will upload the other two questions we have solved. I will definitely upload the other questions as soon as, inshallah ta'ala, within no time. We don't need to worry for that. Within no time, I'm going to upload the other questions also. But currently, I have solved the 2 of them for you, right? So let's see you in the next class. Thank you very much. Keep appreciating me. Follow my YouTube channel, Learn Accounting with Sir Haris, right? Follow me on Facebook and Instagram. Wait for the P3, P4 guests. I've already uploaded. I will discuss with the mark scheme, with the grade threshold with you. And I'm going for the workshop for AS soon. And it for your exams. So thank you very much. Stay tuned with me so that you can get the next lecture as soon as possible regarding the next part of the paper.